All right, what's going on, y'all? Today is Monday, July 27th, and I want to show you guys this review of this trade I took. I actually entered this trade pre-market, and I want to go over why I did that because usually I'll wait until 9:30 open to take a trade, but recently I've been kind of playing around with other strategies or different models within my trading system to be able to catch trades like this. As you can see, I went short at the 28,687 level, which is this line right here, and I bought back the position, so I exited at 28,525. So over 150 handles in this move, and obviously me being bearish on the day, price did deliver a lot farther than what I took in this trade, but I can show you guys how I was able to anticipate that, even though I just took the low-hanging fruit objective. And I also want to go over the being able to trade through 9:30 continuation, because as you know, there's a lot of volatility that comes in the market, but I was still able to hold this trade with confidence, knowing that my target would be delivered. So starting off the analysis on the daily chart, as we always do, this is the dollar index. And what I was looking for today was obviously at the end of the week, we had this nice push through this short-term high, validating this as a bullish breaker. And Friday trades into that breaker, but we don't get a continuation higher, which leaves this swing high and relative equal highs here. And because my bias is bullish on the dollar index, I am obviously looking for a continuation higher. And we have this small little fair value gap created. I wanted to see price trade into the breaker, offering discount for continuation higher. So once I was able to frame my bias as bullish in the dollar index, obviously that means in the index markets I am bearish. So I was looking for shorts, and we'll get into that here. So looking at NASDAQ on the daily chart, we have Friday's price delivery, a strong close, trading through with consequent encroachment here, and also the swing low, which left the previous week's low. And overnight, Sunday, we have this large new week opening gap higher, and price continues trading through this with consequent encroachment into this premium suspension block, also trading right into the opening price of this bearish order block before this nice distribution lower. So that order block is where high the day is left, also taking out previous day's high, which sparked the run for distribution lower, trading through previous week's low and reaching for this imbalance on the daily chart. So looking at the 15-minute chart, which is where I kind of framed most of my idea on this trade, we had obviously this very large new week opening gap. It's around 200 handles. So that was an obvious draw on liquidity for me coming into the day. And especially because there is literally no trading within it, no buy side or sell side delivery. And we have Asia's low left, right, above. So that kind of adds more confluence for me to look at this as generated liquidity for us to have this run down into. And we also have these relative equal highs. There it goes, relative equal highs, this high and this high, right below this opening price of that daily order block. You see at the end of London and through like just ahead of pre-market, price is kind of working all the liquidity in that level and trading into this daily order block. And that is where we get a nice distribution lower. And my trade was framed using this 15-minute breaker. You can see here. So we have this breaker that is made up from these 3 down close candles before the run into these relative equal highs and the daily order block. And within that breaker, we actually have the 15-minute unicorn fair value gap, which I used in pre-market to enter the trade. And obviously you see going in the market open at 9:30, just get a very heavy one-sided distribution through Asia's low. All this liquidity in here, anyone going long is taken out of their trades very quickly, and obviously distribute through this new week opening gap and through previous week's low. All of this is happening within the first hour after market open. So price was obviously very heavy, and I was able to anticipate that by using the dollar index in my analysis, because what happened over there, we already had our low made for the day, and we had bunch of buy side objectives to look for. So as the dollar index is running higher, of course I want to see NASDAQ be bearish, which it did here. So down to the 5-minute chart, I want to show you guys something that offered an entry that was even more precise than just using a 15-minute breaker. And it's something I did not see in the moment before I took my trade, but I quickly noticed after that it was a level that price was respecting all through here. So obviously with this high after the stop run, we have an intermediate term high formed with short-term high to the left. So after this market structure shift with displacement, I am anticipating any subsequent high to be another short-term high, not violating this high that was formed ahead of 7 o'clock. So by looking inside of the leg of the breaker, you have high, low, high, high, then lower, low. So looking inside of this leg, you can see that there is an ICT PD array that he has talked about a couple times, and I've also seen it in price work multiple times with very accurate precision. So I know to look for it, and you see here, it literally held price perfectly for trading through it. Both times price retraced into this unicorn fair value gap, it was also respecting this Reaper inversion fair value gap, which will occur in premium of a bearish breaker. So you see we have premium, discount, equilibrium, 50% level, and in premium of that bearish breaker. Once we drop through it, price trades into this level. Also have a turtle soup ahead of 9:30 open, which is ultimately used to distribute price with this very large range. So back up to the 15-minute chart, I want to show you guys that you really don't have to have these super low time frame entries all the time. If you have the correct narrative and you know where to place your stop loss on the higher time frame to account for how much you want to risk on the trade, then you can take these kind of general trades without having to go down to a 1-minute chart and risk being stopped out on a small movement against your trade. So I just framed my trade on this 15-minute unicorn fair value gap, put my stop above the breaker high. I didn't want to see price trade back into this area. And then I targeted Asia's low. It was almost 3.5 RR on a 15-minute chart, and it was pre-market, so it wasn't really risking that much. And obviously you see it was in profit for a little bit. Price came back against me back into my entry, and I was in a little bit of drawdown, but I saw price was again respecting this Reaper inversion for value gap on the 5-minute, and it just took out this short-term high, offering premium, and price quickly distributed to my target and ended up trading through this new week opening gap and all these sell side objectives. So down on the 1-minute chart, here we have where I initially got into the trade with that 15-minute unicorn for value gap. And you see this initial high was created in the Reaper inversion for value gap. No body closed within it, showing the bearish narrative. And then we displaced through these short-term lows, going to a little bit of consolidation here, leaving relative equal lows below. And price once again trades back up into premium. This 15-minute unicorn fair value gap, 5-minute Reaper inversion fair value gap in the 850 to 910 macro. I'll show you that here. So within the macro, we run out these buy stops, short-term relative equal highs, form with this high and these highs right here into that inversion fair value gap within a time where we anticipate spooling lower. And once we do that, displacement, market structure shift, it validated this bullish order block or change of state of delivery. Price retrades into that. Also this 15-minute unicorn fair value gap, the low. And from there, we get a nice displacement, validating the sell side delivery from this change of state of delivery. So now we are looking for bearish PD arrays to act as resistance as price continues lower. So once we return into the SIBI, you see the bodies are remaining below consequent encroachment, which shows the real narrative behind price, which is very bearish. portion left open. And also we have this propulsion block validated that traded into this change in state of delivery. You see prices working that, the propulsion block and the SIBI. And ahead of market open, price just begins spooling lower. Again, you want to see bearish PD arrays respected, and also once you see breakaway gaps that form in price, you can know that price is very weak and you are likely in a good trade if your narrative is correct. So once the sell side delivery is confirmed and you see price is very precisely respecting all these bearish PD arrays, you can anticipate sell side delivery to continue. And you see here we have a breakaway gap form. Price returns to the low, but leaves the whole range of it unfilled. So that shows me that price is very weak. And then we of course displace through this short-term relative equal lows. And just ahead of market open, we continue the spooling lower. And initially at 9:30, we retrace into this small 1 minute for value gap. The body stays way below, and price just continues to work its way down, spooling lower into Asia's low and delivering the new week opening gap high within the first 5 minutes of the open. So the reason I was able to hold this trade through market open and not get scared that price was going to retrace before delivering my objective was because going into the market open, since the macro, I'm seeing all these precision elements, like the market is following a certain algorithm. So with that gave me the confidence of being able to hold this trade. You want to see upper half of SIBIs remain open, order blocks supporting price or acting as resistance, and you see breakaway gaps are forming. So obviously price is spooling toward a certain objective. So I was able to confidently hold that trade and not worry about price coming back to take me out. And another important thing on this trade that I did is, even though price did go a lot lower, and I could see why it went lower because we have this new opening gap that was unfilled, and also the previous week's low as an objective. Even though we have all that, I still wanted to just take a low hanging fruit objective because it is better to secure profits, especially when you only have one contract like I did. I wouldn't have wanted to sit through this retracement because I probably would have ended up impulsively closing the trade or putting my stop loss way too low. So I am glad that I was able to take my objective and be happy with that. And I want to preach in trading that it's very important to be grateful for the profits that you do make, because not all the time will you catch the low or the high of the day, and price will a lot of the times go beyond where you anticipate. But as long as you are able to frame a trade trading in that direction, then you can make consistent profits, which is why we trade. You're not trading to flex that you are better than anybody else. You're trading to make money, and that is what I did today, and that is what I will continue to do. So I hope you guys enjoyed the video. I hope you learned something, and I will see you guys on the next one.